Morning, folks. How is everybody doing? Hey, Ken. Lola, good morning. Ellen, Jill, Hopium, Sharon. How do you increase the sound? It could be me. Let me see. Is that any better? I did. I did. Yep. Price action. Mm-hmm. Yep. Oh, it got too loud. I can back off a little bit. Yeah. Yep. We'll be getting started in just a minute, folks.
Good morning, everybody, or good afternoon. Let me just turn on YouTube real quick. Hey, gang. Ken, I hope you got my email that I sent you yesterday. Oh, there it is. I was looking for YouTube, and it's right here. Let me just take this, take that, take this, put this here, switch this around. All right. So let me just start off with greeting everybody on YouTube, and then we'll move on to the other room. Pete, Mark, Kevin, Devin, Wall Street Beast. Wall Street. We have Wall Street Beast joining us, Matt.
Oh boy.
Oh boy. We got SJL. We got Jody. We got Richard. We got Patrick. We got C Fazio. Please, please, please make sure you're watching at 1080p. I'll go ahead and show you what I'm talking about, and then we'll be getting started. Is the room's a little light? No, Matt?
Yeah.
Can you make sure everything went out?
The telegrams went out late.
They did.
Yeah.
The telegrams went out late. That's not good. It's not
Not late, not after we started, but later than usual.
Gotcha. Gotcha.
And it's
Gotcha.
Friday.
It is Friday. So everybody who's watching on YouTube, this only applies to you. Make sure you're watching at 1080p. Go to the gearbox and make sure you're watching at 1080p, okay? Really, really important. So hold on a second. Let me just turn this off. Put this over here. All right. All right. RSP looks like it's coming off. Oh, my video's not on. Let me turn on my camera. There we go. All right. Now let me say hello to everybody on YouTube. I mean, on Zoom Room. And we'll go from there. Richard, how are you? We got Richard's asking you how your accident injury is doing. We got Sean, we got Doug, we got Jason, we got Steve, we got Ken. David says he made $2,230. I like that. Go ahead and grab that. Cyrus, Jill, Ellen, we got Doug, we got Robert, we got Michael, we got Bodine. Oh, good, good. I'm glad it sounds good. Christopher. Oh, my pleasure, Christopher. I always have good. I always have time for normal questions. It's the crazy ones that Catherine, Debbie, Jesse, Murmis. Hey, Murmis. Haven't seen you in a while. I hope you're doing well. Santiago, how are you? Uh, Las Vegas. Hey, Wes. How's the weather in Las Vegas? Is it like 110 right now, or is it cooling off a little bit? I love Vegas, but the weather in the summer can be like really atrocious. DJ Dave, Brian, Ivano, John, Stefan. Oh, Steve, not Stefan, Steve. Penny, Cyrus, Santiago. I don't know if I don't think it's resolved because we haven't done anything yet, Santiago. I have to take Matt back to the house and we'll have to fix that. It has not been fixed yet, no. But I do have this. I do have this, which is a adapter. So I'm going to try to connect this in the USB and we're going to see if it works. But we're going to try doing that today. If we get a chance today, obviously. Hank, Bodine. I got good internet now. Can do 1080. Very good. Good, good, good. John, Catherine. Aloha, Genevieve. We got in the morning session, is there a Zoom access? No, there's no Zoom access in the morning session. It's just via YouTube. Hey, Naples fan, good to see you. Good to see you. Richard, Mark, Ben, Eduardo, Ken, Esther. Yeah, it was Rick, Dollar Bill, David. Nice, nice, nice. We got Kurt. iPhone, if you want to know how David did it, you may want to post so he can actually see what you're posting for him, which is right here. I'll do that for you. All right. We got Tom, we got Greg, we got Maggie, we got Chris, we got David. Thelma says, hope you get your computer Oh, me too. It's just annoying. That's all. It just takes me longer to get ready. I mean, I could pretty much still show you everything with TC2000 and all that. It's just annoying. Carla says, I'm observing that the volt is going down and the SPY is high. Then the MBD line is going down. You all went long just trying to learn. You know what, Carla? Carla? So here's funny that you mentioned that because I had the same question for Matt when I stepped outside. I went outside to step out. I saw the volt was making lows and I see Matt went long. So can you please explain to us why you went long? Because I know why you went long. I know the answer why you went long. But can you explain it to Carla? Because it's a good question. It's a fair question. Go ahead.
Normally I wouldn't go against the Vold, but the Vold it is going down, but it's not going straight down. It's kind of wishy-washy. Volume is very low today, and we've already proven the first time that we had a propensity to go higher because we've had higher lows and higher highs all day long. So we took a pullback. It was breaking out on the 1 minute time frame. From a moving average perspective, it had volume with the move, so we took it. It got slapped down right before lunch. We're at the VWAP right now. So instead of trying to fight the internals all day long on a low volume day, we're trying to go with the price action and just keep a close eye on it. But the range is pretty small, so we don't have a ton of risk.
Buckus says, "My greatest fear is that one day I will ask a crazy question in the pre-market. Just at normal. I'm a normal person. If you ask me a normal question, I'll answer your question. If you don't antagonize me, you don't say something inaccurate. You just ask a normal question. I will bend over backwards to answer your question. And by the way, out of like 1,300 or 1,400 people that I interact with on a daily basis, I can probably count on half of one hand how many weird people we've had. You've got to, think about this. One in 100, one in 1,000, the odds will catch up to you, right? But for the most part, people have been amazing. But Carla, I had exactly the same question. I came in here. Actually, I saw it when I was walking out. I came here and I had the exact same question. He did it because we were approaching the VWAP and we're making higher highs. Higher highs are very important. But I
It,
agree with you. I agree with you. Not only is the Volt going straight down, but ADD is not really bouncing either.
uh,
Those
one more thing got me into the trade. We made a lower low on the VIX.
uh, we did make a lower low on the VIX. I'll give him that too. So I had exactly the same question you did, Carla. Okay, in case you're curious, I had exactly the same question. Ken says that you even answer my oddball questions. Ken sent me an email about Horn of Africa grains yesterday, and actually, what's funny, Ken? I was like, what the hell is he talking about? But then I started doing a little research, and I got really into it. I got into the topic. It's actually really interesting. The benchmark. I thought it was interesting. Was my email at least a little bit helpful to you, Ken? I hope so. Let me know. I hope it was. So yeah, I had exactly the same question that Carla did. So you weren't the only one. All right. All right. All right. All right. Usually don't get fired up unless people start posting things that are exactly. Thank you, Greg. I'm a real like if you exactly. I'm just gonna say, Greg, it's exactly right. If people don't post inaccurate stuff, I don't get worked up. You ignore the volt when volume is low. Yeah, very, very low. We have low volume, and also something else that Matt said that I wanted to make a big deal about is we have low range today. We're only down 0.39, and usually when we're down less than half a point, I've that's context. Usually when we're down less than half a point, the market tends to do this instead of moving directionally. What gives me a pause today, and Carla, I couldn't agree with you more. That's all I'm going to say. Is that the VIX, the Volt continues making down. To me, this looks like a downtrend, and the fact that more importantly than even the Volt is that we have ADD at here, and that's telling me. But it is Friday. We tend to peter out around 2 o'clock. We're near all-time highs. Um, exactly, Jason. I really don't. Folks, I love helping you out. I live for this stuff. But when people start saying like inaccurate things or something that's not 100, that's what I go off the rails. I'm very objective, and I like my life to stay objective. The key to being successful is being objective. And when you start saying things that are not accurate, it's just like what it's like saying it's dark outside when it's light. I'm very even, and I love to help. And you guys don't know this, but I'm actually pretty mellow when I'm not live with you. I get really excited because I really enjoy being here with you. Um, yeah, I go there anymore after paying a lot of money for. So what is this? Even for dumb questions, he will chide you for a while and then back to normal. Not like crazy chat room and where asked questions you get muted for life. No, I don't do that. Yeah, you got to be objective. You got to be objective. Good, Greg. Good. Yeah. So I personally would not have taken that. And Matt this could be the best trade we've ever had. I don't know. I have no clue. But I would not take this trade for the same reason as Carla. And when I came back here, I did say, Matt, why did you take this trade? I understand why he took this trade. He has a good reason taking the trade. But I personally would not have taken the trade. Doesn't mean anything. Half the trades I would have taken, he wouldn't have taken, and vice versa. So it doesn't really mean anything. And that's why it's really great. And that's why it's really great to have the two of us here because we bounce ideas off of each other all the time. Okay, so I wanted to teach you guys something I wanted to teach you guys some stuff today. I really wanted to teach you, which I'm going to do right now. I just want to pull up my syllabus. This is what I was doing at 8 o'clock at night last night. I was writing my syllabus. Here, let me write my syllabus. At night, that's what I like to do. I got my internet working yesterday. It's all great. Very nice bugs. Very, 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 very nice. Very nice. Go ahead and repost that, Matt. So first thing I want to show you is I want to show you this is really cool. Now I'm going to use bar chart for two reasons. I'm really comfortable using it. I've had enough internet problems. I've had enough internet problems today for one day, and I just don't want to muck around with my other software. So I hope you guys can just give me a break and you guys can mimic what I'm saying. I did right here. Look, I wrote a syllabus for myself right here. Tomorrow's VIP agenda. Look at what time I wrote it. 7:46 at night. This is what I was doing at 7:46 at night last night. 7:40. It's obviously not 7:46 right now. So this is what my butt was doing at 7:46 last night. I was writing an agenda for you guys. This is literally what I was doing. It's after dinner. This is what I was doing last night. Okay. Proof with timestamp right there, 7:46. I love being here and I don't get paid for being here. So this is fantastic. I love it. It helps me become a better trader and it keeps me honest. Okay. So I'm just going to use this on bar chart. You could use this on any program you want. Okay. You could use this on any program you want. They all have this filter. Now, ATR is a non-directional filter. Okay. All right. So I'm just going to pull up the S&P 500 and I'm going to go to chart. Pete says that thanks, Ken. It's still not clear if it must be moving up to indicate trend momentum. That makes sense. Yeah, it has to move. It has to move up, whether the trend is down or up, but it has to be. So as long as the stock is trending above or below 20-degree slope, you will have an ADX that's rising. It's it's direction blind, not color blind, direction blind. So yes, ADX will go above 30 when you have a slope in a trend. Like here, I'll show you. I'll since we're on the topic, I'll show you anyway. Here. Here's ADX. It's already at 10. I like to use 10, not 14. And you can see right here. See, we have a trend, right? It's moving higher. Now, see right here, we have a downtrend. This is a downtrend. What does it do? It moves higher. When you're doing nothing, it does nothing. Okay? Just wanted to make sure you understand that. So it doesn't know which way the trend is going. Okay? It doesn't know which. Everybody could hear me, iPhone, except you. So anyway, let me just go back here. So when you see this rising, that means the asset is trending. When you see it falling down, that means that trend is moving down. When it's moving down, doesn't mean the stock is moving down. If it's moving down like this, you're going to see a nice trend. Typically, I like to see it above 30. Above 30, it's hot. That means we have a good trend. 30 to 50 is a good trend. Okay? Okay. Now let's move to the part that I wanted to teach you. Now, nobody's going to teach you this, okay? Except Uncle Roger. They just assume you already know this, but I don't assume anything. Again, I use 10-day ATR. If you want to use 14 period, that's fine. Not 10 days, 10 periods, 10 bars. It's going to look at the last 10 bars, okay? Okay. One second. Change this. There we go. Okay. So this is a 5-minute chart of the SPY. Okay. This is a 5-minute chart of the SPY. You know what? Let me change this template. It'll make it easier for you guys to see all of this. Okay. And you could follow along on bar chart if you want. This doesn't cost, I don't think this costs anything. We're not like trying to get live data or anything. Yeah, 10, 10. All right, there we go. Perfect, perfect. They're two different things. One measures the strength of a trend, one measures volatility. Like if somebody asks you, Michael, how much does Microsoft move per day? This will answer here. Every time I do this, I have to change it. So let me just stick to my example. But ATR, like let's say I wanted to do Microsoft. Look, here's ATR on Microsoft. I should probably answer Michael's question first because that actually, I should probably not assume you know what ATR is. So here, Michael, if somebody asks you, how much does Microsoft move? Well, the average range in the last 10 days is $6.36 a day. Okay. So just want to make sure you guys have that and you understand that. All right. Hey, Omar, how are you? Thanks again for the email. 10K a day is not a bad return. Okay. So let's continue. Let's continue. So I'm going to go back to the SPY. Okay. Have to change this again. And then we're just going to stay with the SPY. Okay. So all I'm doing is I'm adding right now, I'm adding the average true range to the SPY, and this is a 5 minute time period. Okay. Okay. What's the range on the SPY? 50 cents. So what the ATR does at any given time, Michael, at any given time, all it does is go back 10 days, okay, and calculates the average. So imagine the high is $5, the low is $4. The next day again, the high is $5, the low is $4. Every day for 10 days, the high is 5 and the low is 4. What's your range going to be? $1. So this, but you don't have to do that calculation. This does it for you. Now, when you're looking at the market, this is going to shift as you're looking at price on the S&P 500. And a lot of people ask me, Roger, how much should we give? How much root? Okay, so let me start with the problem. The problem is a lot of time you're day trading, and a lot of times you don't, you're day trading and you don't have Alpha Zone Pro. Alpha Zone Pro does this automatically for you, okay? But let's say you don't have Alpha Zone Pro, okay? Fine, I'm not going to make you buy it. I'm not going to twist your arm. You don't need to buy it. Don't do me any favors. But um, but let's say you want to day trade the S&P 500 for yourself, or let's say you want to get an idea of when Matt takes a trade, what kind of a stop loss we're going to give ourselves mentally. Or you may be asking, well, Roger always uses these damn mental stop losses. Where the hell does he get those numbers from? Am I in the right stratosphere? Did I get one of those three right? You either don't have Alpha Zone Pro, you either have it, but you don't know how to set stop losses. You don't know if stop losses are big enough. You don't know how we calculate stop losses, and you want to know how to calculate stop losses. Does that work for you? Am I in the right stratosphere? Am I in the right ballpark? I wanted to explain to you what the problem is. If you don't understand what the problem is, what's the point of me explaining the solution? So this is SB says yes. Darcy, Bob doesn't seem too enthusiastic. He's like, sure. Steve, yes. This is important because this will tell you where to take your profit and where to take your risk. Don't you guys think that's really important? Yes, Buck, it's a momentum. ADX is a momentum indicator. Don't you guys want to know how to calculate? Let's say you have your entry and exit figured out. Don't you want to know where to get out of a trade and when to get into a trade? Jason says, that's where I struggled with. Okay, all right, finally people are waking up. This is why I say, if I teach you something without explaining to you what problem it solves, you don't seem very motivated. But when I explain to you what the problem is, then you're like, oh shit, this impacts me too. I better pay attention. We're not there yet, Pro Trader Cab. We're not there yet. My agenda did not have one thing on today. It had several things on today. Everything I'm saying right now applies to the E-mini S&P, the micro E-mini S&P, to the S&P 500. It doesn't matter which one. They all used ATR. Matter of fact, ATR and ADX were originally invented for commodities. The book that we had in the live class Technical Analysis of the Traders Market by LeBeau. You guys remember the live class we had? Somebody had that book there. That was the first book where they introduced ADX and ATR. Ken had it. There you go. See, I remember that stuff. So this will answer your question. This will help you. This will help you understand, right? This will help you understand uh, how far you should be using your stop and where you should be using your profit target, okay? So, as we know, there are many, many different ways to trade the SPY, right? There are many different. When I say the SPY, okay, so when I say the word SPY, just assume I'm saying E-mini S&P or micro E-mini S&P. I'm saying it's one, second, and third. I'm just going to say when I'm trading the indexes, okay? How about that? When I trade the indexes, because I want to have clarity. So when I'm trading the indexes, uh, second, I want to put a trade on. 1 second. One second. I want to put a trade on real quick. One second. Okay, there we go. Sorry about that. I just needed to place a trade. Okay. All right. All right. All right. That's what I wanted. Waiting for that round bottom. And if you're in the pit, then you know what I just did, and you're going to keep your mouth quiet. All right. So, yeah. Okay. All right. So you're day trading. Okay. How do you figure out how much room to give your trade? This asset right here, this little thing right here will tell us that the average range of the last 10 bars, and I like 10 bars. You could do 5 bars, but I think 10 bars is good, especially day trading. There will be a recording, Gus. Just go to the live tab on YouTube, and this will be put in the members area, okay? But let me continue with this. Let me continue with this. Multitasking. That's what I'm doing. All right. We know that the range is 50 cents. Now, would you use a 50-cent stop loss when you're trading this right now? I don't care what. I don't care if you're picking tops, picking bottoms, going with the moving average, bouncing off of the VWAP, using the polar lights. I don't care what you're doing. I'm not asking you about your entry or exit. I'm talking about your risk and your stop and your profit target. Not asking you about your how you enter and exit your trade. I'm asking you how much room to give it and where to exit. Okay. Would you give, of course you would, Sean. Would you give this 50 cents? Sean, you would give this 50 cents? I just got done explaining to the range is 50 cents. Bob says maybe twice or 1.5 to ATR. Okay. 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 Anybody else have any comments here? I like where we're going with this. Any other comments here? Okay. Sorry about that. Multitasking. Okay, all right. More than ATR. Ken says 2 ATR. Bob says 1.5 ATR. Forrest says 2 to 3 times ATR, depending on trade parameters. Ah, now we're getting somewhere. Previous below the previous bottom. Well, Joe, that means you're not really using ATR, or you sort of, kind of, but not really, right? Let's talk about ATR. ATR for the day or for 5. This is 5 minutes. We're only talking about 5 minutes. Although we could be talking about daily time frame too, but we're talking specifically 5 minute index trading. Okay. And by the way, it doesn't have to be a physical stop. It could be a mental stop. Where would you put it? I want you guys to think about this. It depends on your strategy. Depends on your strategy. So let's say you have a strategy. Let's say you have a strategy that's 70 to 75%. Let's say you have a strategy that's 70 to 7. Let's say you have an 80% win rate strategy. Okay. Okay. 80% win rate strategy. Let's say that strategy entered an entry right now. Okay. Let's say it entered an entry right now. Right now. Just hypothetically speaking. Okay. Okay. And let's say we enter right here at 623.50. Okay, I'm just going to say this is 623.50 just to make it easier for myself. 623 would be right here. That's not bad. So let me tell you what I would do. Okay. The higher the win rate, the more ATR I would give myself to the downside. And the less ATR I would give myself to the upside. What? What are you talking about? You're doing it all backwards. You're supposed to let your winners run and cut your stops, not make your stops twice as big as your entries. But you said your win rate is 80%. That's how you get that 80% win rate. 2-to-1. Twice as much downside risk as upside. Now, let's say someone told me that their strategies wins 40% of the time. I would say use 1.5 ATR to the downside and 3 ATR, or maybe even 4 ATR to the upside. Okay? So the ATR that you use as your stop loss is determined by the type of strategy you have and your risk parameters. So let me give you a real example. Let's go to our 2 screens here. Remember what I told you when you're trading this right here? When you're trading this right here, this is very high probability, okay? This is not as high probability, but look at the size of your winners. Capiche? That's why you're here, John, because you didn't think of it like this. That's why you're here. I've been thinking about it for 31 years for the both of us. So look at this trade. Look at these type of trades. You'd get in right here at 623 and you'd getting out at 627. When you're trading these type of trades, you're probably going to be right 55, 60% of the time. Okay? When you do that, you want to keep your risk real small and you want to keep your profit real big. But when you're trading trades like this, down and up, most of the time you will find that your risk to reward is actually 2-to-1. That's what high probability is. Have you guys ever seen me in the pit? Have you ever seen me trade in the pit? Sometimes I'll let the trade go way, way against us just to take a smaller profit. That's the same concept. Okay? All right. So you want to use ATR. You do want to use ATR, but you should first have a really good idea of the type of trades you're doing. Are you trading in direct? Are you looking for a big move, or are you looking for a little move between these things? Now, just so you know, this uses almost an ATR. This uses pretty much like a 1 ATR. Doesn't really use more. Actually, it does use a 1 ATR now that I think about it. And I think 1 to the upside and 1 to the down, or 1.5 to the 1 to the upside against you and 1.5 for you. It's very high probability. But typically, somebody was teaching me a trading strategy just a few days ago, and they were basically using 1-minute charts. They were using 1-minute charts like this, and the strategy had, I'm going to show you what this was. Do you guys want me to show you the strategy? It's a pretty cool scalping strategy. By the way, how are we doing on that trade, Matt?
We're up a nickel.
Ooh, be still my heart. Use the 10-day moving average, okay? Anytime we made a swing high and we pulled down 3 bars and closed, the third bar closed at the top of the second. The third bar has to go below the low and then come back above here, it would give you an entry signal. Exactly. That's exactly right, Mike. I'm going to repost what you just wrote because it's useful. It's useful. And people say I don't teach them stuff. Ha. All right. So let's continue. So you'd be looking at this. Okay, price action has to be completely above. I'm going to give you the rules for the upside. Price action has to be completely above the 10-day moving average. It's a simple moving average. Then you have to have 3 down days, but the third day, the bar, not days, the third bar supposed to come down, break the slow, and then come at the top, close up here at the top above this level. Okay, and I think I'll program it one of these days. But here's the way it's to be traded. So let's say the entry was just hypothetically, let's just say the entry is right here, okay? What's the ATR? 18 cents. The stop loss would be 18 cents below this bar, and the profit target would be 9 cents above this bar. So you would know right away if you want to take the trade based on the ATR. There's 2 rules. 10-day moving average, simple moving average, because you don't want it to be too shaky, and an ATR. And the ATR literally tells you where to take your profit target and when you take your stop loss. Okay. And my suggestions, can you day that again? Can I do that again? Yes. So it has an ATR, it has a 10-day moving average, 3 days above, completely above the moving average, 3 green bars completely above. Then 3 days below, with the third bar breaking the second bar low, but closing above the second bar high. Okay. And this is like 3 lines of code to program. It's not very hard. But the point is that, but okay. So now you get an arrow. Let's say you get an arrow right here. Okay. What's the ATR? 18 cents. Let's say you get an arrow right here. Okay. Your profit target would be 11 cents. Your stop loss would be 22 cents. Days or bars. Each one of these is either day or bars. That's determined by the time frame. We're using it 1 minute, so they're bars. I just call them days or bars because I look at price data completely interchangeably, whether it's 30-second bars or yearly bars. Bars, days to me are just the way I speak. Okay. So bars. These happens to be bars, 3 bars. So 3 days up, 3 days up, and then 3 days down with the third bar, and it has to close above the 10-day. Everything has to happen above the 10-day. So again, let's say you get a signal right here. Okay, here you would have gotten maybe an entry right here. Okay, right here to the short side. ATR was what? ATR is 24, which means your stop loss would be 24 cents above this high, and your profit target would be 12 cents below your entry. Just simple moving average. I'll give you more details of it as I back tested it. But this guy, he just sits there all day and he scalps it on a 1 minute chart, and he was showing me to me. But I was like, you know what? I better show them how to use. What I wanted you to get out of this was not the strategy. What I wanted you to get out of this is how vital ATR is to your trading, and how most folks don't use the ATR, and how you can use the ATR to help you figure out your stop loss and your profit target, assuming you know the kind of propensity your system has. Okay? Really, really, really important. Like really, really important. Is this beneficial? Is this giving you guys something to think about? I understand, Santiago. But the ATR is very important. You should know, if I ask you in the middle of the night, if I come to your house and wake you up in the middle of the night, and I say to you, what's the ATR of Microsoft right now, assuming you're in Microsoft or NVIDIA, you should know the answer to that question like this. You should know the answer to that question like this. Do you know how many times I've seen folks use a stop loss of less than 1 ATR? Let me give you an example, okay? You buy a stock like Coin, all right? Or Tesla, let's just use Coin. That Graham uses my bar charts all the time, that rascal. It's very useful. Yeah, yeah. But from one of your videos a long time ago. But I'm showing you for day trading specifically how you could use ATR to determine where to take profit. I know a guy who just uses price recognition and ATR because it just saves you from having to calculate what the range is, you know? And you need to know what the range is. So here, average true range. Look. Okay. All right. So you get into coin right here. When Uncle Roger told you to use coin, coin goes against you $10 and you start panicking. The average range on coin for the last 10 days is average. This is the last day 10-day average as of right now. It's 20 bucks. Went up as high as $21. So you can see it's $20. You should never, ever, ever. This is daily bars. Everything I'm saying to you right now, 5-minute charts, and I use the same procedure in 5-minute chart, and it's deadly accurate. Oh, good. Good, Glenn. All right. Glenn was in that class that we have a picture from. Um, all right. Let's continue. So here's Coinbase. You don't know how many people Coinbase moves 10 bucks against you. Well, Roger, it moved below the low, but the range, the average range is $20. It's expected to move $20 in a day. Oh, I wasn't expecting that. That means you weren't looking at the ATR. Yeah, absolutely, Hefe. That's very Hefe. I'm going to repost that because that's very funny. You didn't post it for everybody. Let me repost that. That's funny, but it's so true. So you guys understand? You guys understand what I'm saying here? How important this is? Having the ATR, whether you're day trading. This is a daily chart, by the way. Okay, well, Roger, I don't day trade coin. I mean, I don't swing trade coin. I day trade coin. Okay, fair enough. Fair enough. Every one of these charts, every one of these bars has a range of $2 in the last 10 bars. Well, Roger, I only use 50-cent stop loss. If it goes against me more than 50 cents of any stock, I have a rule. Any stock that goes against me 50 cents, I get out. Well, I got news for you. You're gonna lose your money. Number two, you're trading your P&L, and number three, you're not taking volatility into account. Have you ever heard of those people? I only use a dollar. If it goes above a dollar, because I read in a book 20 years ago, if it goes above a dollar, I get out. No, this will tell you mathematically what your stop loss levels should be. Or they'll tell you levels you shouldn't be freaking out at. Okay? All right? Really, really important, which I think is really important. Okay? So again, I simply want you guys to understand where I'm going with this, okay? Very, very important. Whether you're day trading, whether you're swing trading, I don't care what it is you're doing. I want you guys to start using stop losses that are based in reality, not in a made up world that you imposed on the stock. It just doesn't work that way. Yes, X of ATR for stop loss. Usually at least one ATR. If you don't have one ATR, if your stop is not one ATR below your entry, then you just give the market money. You want me to do it on the SPY again? Okay. So here's the 5-minute chart. Here. So put 2 days here, put real time. There you go. Yes, this recording will be in the Alpha Zone Pro and Trading Zone Live members area. And we use these tools. Now, Matt and I can do this visually pretty well at this point. We can kind of see if we could see right here, okay? I made a comment to you guys this morning. I said, look, the bars are bigger here and they're getting smaller as we're going up. That's not a very strong sign. And I said market internals are weak. And what did the market do? It went right down. That's all I was trying to say this morning in my email or whatever in the Telegram note. But notice volatility. And by the way, ATR usually when market stabilizes, the ATR goes down. When the market breaks down, the ATR goes higher because volatility rises when markets go down. Okay, really good stuff. See, and you guys thought I was just going to talk about my internet today. Okay, we're on to teach you that now. Number two, number two. Yesterday, while we were here, I talked about solo candles. Solo candles are here. Okay. Solo candles. This is a solo candle right here. Well, it's not. It's actually a double candle. But you see how this candle went down? It looked like it was just going to fall apart, and then the next candle just completely erased it. This is a solo candle right here. Okay, on a 5-minute chart right here. That's a solo candle. Usually, solo candles are big candles like this. This is a solo candle. These candles are just holding on right here, and this candle looks like we're going to break down, and we don't go anywhere. Okay. I explained to you yesterday that one of the most important things you should be looking when you see a candle like that is your eyes should be on the tick. And this comes free when you purchase the Trading Zone Live Lifetime or Alpha Zone Pro. And I'm going to be extending it. I'm going to be revising it, actually, adding a couple of things to it. But my point here is if you don't see this going to 750 when you see a big fat candle like that, there's usually not much move behind it. But there's another thing you can do, a confirmation, okay? A second confirmation. And that confirmation, and I'm going to tell you what that confirmation is VIX. If you see a big candle, a big ass candle, and you don't see a reaction if you don't see it the same type of candle on the VIX, I mean, obviously it doesn't have to be the same size. But if you don't tick 750, 750 is my threshold for tick. This 1500 but again, just because we're not at 1500 right now, notice we're in this area. That means there's a lot of pressure on the market today. There's a lot of pressure on the market today. That's why I would be, I mean, swing trading and all that, that's all fine. But I'm talking about 5-minute charts. That's why I was surprised that Matt went long. But again, he has his reasons. That's fine. But this is your first, when you see a candle like that, when you see a big fat candle, you want to say, oh, are we above 750? Are we below 750? If it's going up, if the candle's going up, you're only checking if it's above 750. If its candle's going down, you're like, are we going below 750? And notice the majority of today, we've been at 443, 677. So there's definitely more pressure to the downside. This went several times close to 700, and this never went above 400. That's another indication. But another thing you want to see is the VIX. I want to explain this to you guys so you guys understand this, because a lot of you don't understand this. Hold on a second. I'm just going to open up the door real quick. Get some fresh air in here. 1 second. All right. Sorry, I'm back. So one of the things you need to understand is, what is the VIX? Does everybody know what the VIX is? Let's see. Does anybody know what the VIX is? Can anybody tell me? Volatility index. Volatility index. Okay, but can somebody tell me what it is? How? Okay, all right, all right. Without cheating, can somebody tell me in a few words how does it work? Okay, it's a volatility index. Can you tell me how it works? Nope. Nope. Close. Yes. Who was it here that said it? Yes. Ken said it right. Yes. It reflects the. All right. So how about we just stick to what Ken said, because Ken has it right. Basically, what it is it's the measurement of the at the money options on the SPX or the SPY, whichever you want to call it. You're all giving me the label. You're all telling me what it is, but none of you here are telling me how it's generated. They take the at the money options of the S&P 500 and they measure how they expand or come down. It's basically taking a pulse of the at the money option on the S&P 500. Now I'm going to ask you a question. Most of you have seen the S&P in action, and you know those options are the most liquid things in the world. Okay? What do you think? What do you think? What do you think is more sensitive than the VIX when it comes to the SPY? Do you think anything will move faster than the option on a VIX when the SPY is making a move? I don't think so. You're not answering my question. Simon, you're not answering my question. The sensitivity of an add the money option is very, very strong, right? Really, really strong. Okay? Really strong. So if you're not seeing option volatility increase, that means options traders don't give a rat's butt about the movement that you're seeing in the underlying right now. You understand? He started talking about time decay. It has nothing to do with what I'm talking about. Yes, I understand what it's called. It's a volatility index, but how is it calculated? It's calculated by taking at the money options, options that have a delta of 0.50. Those options are very sensitive. Why are those options very sensitive? Because those options are at the precipitous, yes, I said precipitous, of being in the money or being out of the money. So they're the most sensitive options to changes in the price of the index. If the implied volatility of those options is what the VIX is based on. So it's like you know when somebody does drugs and they flatline they inject drugs or they inject something into their body, you feel it, the brain feels it immediately. That's the relationship between the option volatility and the price of the underlying. It's like boom. It's like immediate. There's no way it cannot be immediate. Sometimes the options will move before the underlying will move, right? Yes, precipitous. You guys understand what I'm saying, though, right? So, under those circumstances and in those situations, if you see a big move in the SPY, then implied volatility has to be affected immediately. Yeah, those options are always 0.50. So if you wanted to gauge volatility in the SPY, you have the VIX. You don't need the black skulls. See, if you want to see what the implied volatility on Microsoft is, you need to, you take the black skulls model. They'll take the price of the option and they'll make it like a pie. And they'll tell you that for right now, 20% of that option is implied volatility. And as Microsoft goes up and down, that piece of that pie gets wider and narrower, and takes over the entire, little by little takes over other parts of that pie. Okay? And it goes back and forth. You could see it in real time. Well, because the SPY is so important and it has 500 stocks, somebody just said, "Hey, we better just make it public because so many people want to know how that volatility is moving on the SPY at any given time." There is no higher sensitivity asset that will tell you what the SPY is doing compared to the VIX. It doesn't exist. And sometimes the VIX will even move first. Okay? So, how can you use this information? Okay, well, hypothetically speaking, let's say that this is a big bar right here, which we all want it to be because then we could take profit on that trade that Matt put on. But maybe it'll come up. It should theoretically make a higher high around 2470, kind of right here. We'll see if that happens. But we are above the VWAP right now. So, but the first thing, if this bar looked like a big bar like this, this isn't even a big bar, something like this, solo bar. First thing I would do is I would look right here and I would say, is this at 750? The second thing I would look at is volatility. Now, if the bar is going up, you should see a volatility spike going down because that means volatility is going down. If you're seeing volatility going up, okay, or not doing anything, the odds are, the odds are that move is a fake move. So remember I told you how to tell fake moves from non-fake moves? Now, folks, I'm about to have a class and I'm about to put all this together for you. If you want to hear that class, if you want to get more information, which I hope you do, if you are in YouTube, Matt is about to post a link. Please, please make your way into the Zoom room. Matt, do you have a link? Post it in YouTube, would you? How's that trade doing, by the way?
Pretty good.
All right, all right. All right. So again, if you're here, if you are here, nothing for you to do. So you see in the Zoom, I wrote nothing for you to do. You guys are already here. There's nothing for you to do. Now, there are several sorry about that. Several indicators like the ones I just showed you. But most specifically, I like to use tick. We just had a shift in momentum favoring the upside. That's the cowbell sound. There is nothing more sensitive to see what is happening at this moment than the VIX and the tick. If you want to get a broader picture, ADD is really good. But nothing will tell you right now, this second, is this a real move or is this just a BS move? Nothing will tell you that better than tick and VIX. Okay? Just want to make sure you guys understand this. Now, Matt, can you please turn off and I had two other parts that I wanted to share with you. In about a minute, turn off YouTube, okay? And here, there's two more things I wanted to share with you. I wanted to talk to you. Okay, so we talked about ATR, we talked about VIX. We still have to talk about how to identify strong intraday support and resistance and which options are better for day trading, in the money or out of the money. So we're going to talk about that on Monday, okay? We will talk about that on Monday. All right, guys, so I'm going to do a class for you right now, and I'm going to put together everything we just discussed, okay? This is going to be a cool class. Please pay attention. You will, every time you watch this class, you will learn more information. You will learn more information about what we do and how we do it.